Hello everyone. So now you can put your sound on. I'm going to be quick, just writing for those who didn't put the sound. Okay. So I'm trying to, this is my first live trading video. So sorry if I made some mistakes or whatever. The feedbacks are always appreciated. To see if I can modify something or whatever. So of course it's gonna improve with time, hopefully. But yeah, I'm going to try. I will try to make those videos very quick, no more than 25 minutes with the review. So the end of the day review. For me, it's the end of the day. So as you can see, I had a wrong analysis in the morning, and even my final TP was not hit, I was targeting this. So I took most of my profits there, and the last 20%, it went break even. It's okay, still a good day. So you see, despite wrong overall analysis or wrong prediction, so I still made profits, okay? While the old me, I had many good analysis, but I was still losing money. This is because of decision making, overall patience, psychology, listening to your inner self, mindless trading. So you can still make errors in the analysis, but as long as you respect your plan, you are not entering, with fear of missing out and whatever, you can still make profits even if you missed. You remember the first entry right there in the 1 minute. So my first analysis of the day was right in terms of overall long-term direction, because you remember my analysis at start, the sell side liquidity, which is there, okay, it was there. Sorry, up. I will just remove all the noise. Okay, up. So my sell side liquidity was right there, all this, and the discount area was anything below this sell side liquidity. Okay, so anything below here, if you have a shift, you can start looking for a buy. Then I changed my mind because overall, this is a big error. It's when you are married to your bias, to your opinion. My opinion, I wanted the price to come down there, to buy from there. And many days I took wrong decisions just because I wanted the price to come there. And so I was trading with my ego rather than trading mindlessly. This is the point when I'm talking about mindless trading. You have to make your analysis using your mind, but not your ego. So you use your mind, you analyze what you see. Like this morning, quickly in 5 minutes, I saw this range. You remember I put the FIBO and the sell side liquidity. So I knew the buy would be there, a logic buy. Of course, it could have continued right from there. It happens sometimes. But you have to stick with what's coming from your inner voice, I knew the right thing would be to wait and no trade until there. I could take the sell, you know, but overall my direction was bullish. And yeah, so this is quick review of my day. I don't want to talk too much. And that's it. I mean, what counts? It's that we finish the day in green. You take your percent, you know. If you can do this every day consistently, well, you don't need to forecast the price correctly or any move, or you know, this will come with time, you know, the prediction stuff. But our job is not to predict where the price is going at any time, etc., but just to take um, a part of the move, you know. For example, you know, when we started taking this liquidity, you know, when we start taking this low, I knew I was wrong in my bullish direction. So I knew it was bearish. But many people would have forced the buy just because they missed the sell entry. So many people would have tried to buy there, everywhere, you know. And I just waited. Normally, I don't trade when I miss, you know, such a clean move. But when I saw that we didn't take this last liquidity, and I knew 100% we would take this liquidity. This is the main liquidity, you know. And so when I saw this nice pullback and this liquidity, I was okay, let's try. And you remember the 15-minute premium area, perfect reaction from it. And there, I could have taken the trade right there. I don't know, I was not stupid, but I wanted, you know, the perfect entry. You know, this is ego trading. With mindless trading, I would have taken right from there, you know, effortlessly. But then I saw this short-term high, and this is forming intermediate term high. So I traded not directly from there because I didn't have the time to click. But once I saw this, I sold from there. It's okay when you have, you know, two pips after it's okay, you know, no problem. You don't have also, you can get caught with the ego trying to get back and trade from there just for 1 or 2 pips. And this is not good, you know. Of course, if it went down there, it's not good to sell, even though normally your stop loss would have been safe above this intermediate term high, knowing that it was aiming for there. So that's it for today. I will try to make a video every day, if possible, and share it with you. So I'm waiting for feedbacks, and yeah, see you. Sorry, I forgot to mention the buy opportunity to review it quickly. I wanted the video to end so quick that I forgot to, you know, just as a back test to explain what would have been the buy opportunity if I waited for it. So you see, every candle in 15 minutes, it closed inside this 15-minute fair value gap. Perfect. Perfect according to ICT teaching. Now you just go down 1 minute. Okay, here nothing clear. You wait when it is rangy like this. If you have if you have seen my last video, which I will link on the right upper corner, the last shift in market structure, when it's rangy like this, you are looking for this type of market shift in market structure. So for an intermediate term high break. So here, short term, no, it's not an intermediate term because there is no short term on the right. Okay, this one. So just Okay, it was okay. Short term, intermediate term. Okay. So let's point the intermediate term up quickly. Shift in market structure. What you do, you put the Fibo on the lowest point of the range. And on the first swing high that you encounter, what is below this? It could have been the fair value gap, but in this case, when I see wicks like this, liquidity, I would prefer to trade from there. So I would place my order. You know, this is also like a rejection block, you know. I like those type of blocks, but if you just want to stick with the easy, this is liquidity. Okay. BOS, because people will try to sell from there. Probably in 5 minutes or something, there would be like a, yeah, it's not clean. Maybe people are selling right there in 15 minutes, or I don't know, you know. If they didn't catch the sales, they are trying to sell. And yeah, maybe this week they count as an order block or whatever. It's not our concern. Our concern is below 0.5. This is our point of liquidity. Or you could trade from this week, or you could trade from this fair value gap. Does not matter. Okay. You can put, even if you want, if you really want to stick to a simple rule, you can just put straight away on the 0.5. If the stop loss is not too big, 6 pips, it's okay. You don't want to miss the trade. It has to come to the 0.5. Okay. If you don't want, like, if you are hesitant, you know, between this or below this or etc., you just put on 0.5, 6 pips, it's fine. Okay. And you are targeting, you know, the daily buy side liquidity, which is there, and our premium area. But of course, I would have taken my profit before. You know, I just wait for like my percent, which is around 20 pips. 20, okay. So perfect. 20 pips, it would have came back around break even, above, some pips above, so you could have been saved. But or you could target, you know, this is a nice liquidity area. But yeah, there were sellers there, and mostly here. So you see, people don't get the chance, you know. They put their sales, you know, sell limit, and boom, stop losses. Okay, so that's it for today. Thanks for watching, and trade safe.